Welcome back. Time for our special segment where we focus on individual sectors. Now, as India recovers from the second COVID wave, we will take a look at where things stand as far as real estate is concerned. Sonal is joining in with a lot of analysis around this. Sonal, what has this period meant for demand and what kind of growth are companies expecting going forward?
Thank you so much for that. Well, the second wave of COVID did impact real estate demand a little. However, all the listed companies in their commentary indicated that the demand in the residential segment is robust and they expect it to continue, in fact. But what has really led to this uptick in demand? Well, first, definitely it's work from home, the need for bigger, well-equipped houses. Second is the salary hikes seen by the IT companies and also the higher attrition that they've been talking about and the talent crunch, which has led to better salaries and increasing the purchasing power of people. Now, the recent Knight Frank report highlighted how on a YOY basis there's a sharp increase in sales and launches in the first half of calendar year 21. Of course, also led by the low base. However, the biggest positive is that unsold inventory that has gone down by 1% on a YOY basis. This has been the biggest pain point for all the real estate companies. However, on the flip side, demand in the commercial segment was impacted due to the pandemic and work from home. If we look at the net absorption numbers, that is basically the difference between spaces vacated and spaces taken up by tenants, this has led to an increase in vacancy levels from as low as 12.7% to 16.6% in Q2. The other thing that real estate companies are focusing on is improving their balance sheets. A recent ICICI Securities report indicated that listed players have been able to reduce debt by 37% from March 20 to March 21. This is via a combination of operating cash surpluses, reduced interest costs, there's equity fundraise, there's asset sale, and also stake dilution at SPV level. With so many factors in place and demand looking up, how does an investor choose which stock to invest in and how to value real estate stocks? Well, of course, price to earnings is not comparable mostly because of the bottom line being very volatile due to accounting norms. So one can look at some of the parts valuations, basically valuing each segment, that is residential segment, where one can value the inventory, for commercial and retail segment, discounting of future cash flows and clubbing it all together. One can also value real estate stocks based on the net asset value of all the assets held and giving some discount to the market prices. Now, some interesting stats, just putting it up for you. What is the state of inventory in the listed real estate space? With Godrej Properties has the highest inventory at 78 million square feet, which is followed by the combined entity of Embassy and India Bulls, and then the others on your screen. For the launch projects, it's Embassy's combined entity that has the biggest launch pipeline pie, followed by DLF, Prestige, Sobha, and the others. Now, interesting to know that most of them have inventory valuation higher than the enterprise value, so that is something we'll be watching out for.
Okay, thanks a lot for that. Very interesting details there. So the sum and substance is that demand has definitely gone up. We have Pavitra Shankar, who is the Executive Director at Brigade Enterprises, and Abhinav Sinha, the Vice President at Jefferies, who joins in now. Thank you to both of you for being with us. Abhinav, I just want to start with you. What is the exact, what are the numbers indicating now? How much has the demand actually gone up, and how much of this you think is based on the pent-up demand that we've seen? What kind of volumes have built up, and how much of it is sort of an indication of things to come?
Yeah, good morning, everyone. Thanks for the opportunity. So, see, we think the demand that we have seen so far, it's clearly, the beginning of what could be a fairly long real estate cycle as such, particularly on the residential front. The volumes, we have to see at various contexts. So 1Q YOY will look very good. It will look very bad versus 4Q, for example. But what we are seeing here is that versus what was the volume, say, in 2010-12 peak, we are still significantly down, and it depends on the market. But my guess would be on India-wide basis, we would still be down, say, 15 to 20%. So there is clearly some distance to cover there. Secondly, we have also not even scratched, let's say, the surface of what should be an inherent growth of demand. There's particularly forces of urbanization, which is happening. Population is rising. And that is not really reflected if you see the numbers for the last 10 years. So there is a lot of room to go there as such.
Okay. Well, let's take that point to Pavitra Shankar as well, the Executive Director at Brigade Enterprises. So, Pavitra, what is your own reading? Is this indeed the start of a multi-year cycle? And the thing is, till now, I don't think we've started seeing major price increases. What happens when we get to that point? And right now, we're only talking about the residential market.
Hi, good morning. Thanks for having me. I do believe that we are at the beginning of a bull cycle in the real estate sector. I think we're actually due for one. The sector's had a pretty tough time over the last 5 years due to various changes in regulations, GST demonetization, liquidity crisis, all of that. And from the demand side, we've actually not seen a great pickup in demand across the board. But due to all of the tough times that we've had, there's been a significant consolidation in the sector. And I think you can actually see improvement happening across some of the largest players, whether listed or unlisted. And given that many people have maybe held off on their home buying purchases, this is kind of the right time that they feel it is to buy a home. Given so many different factors, the affordability is much better due to lower interest rates. Many of the home buyers are driven by the IT sector, and they have really not seen a change in their salary except on the positive side. Potentially, and business to IT companies has actually been extremely good over the course of the last year, and as a result of most companies trying to digitize. So I think there is a great potential for the sector over the coming 5 years. At least we have a visibility for about 4 to 5 years, I think. And real estate typically has a 10-year cycle, so we've come off of some very low points in the cycle, and I think this is the time for it to go up.
Okay, it's a time. Sure. No, actually, I wanted to ask you a follow-up on that. If this is the beginning of a bull cycle in the real estate sector, which is coming after a very long time, Pavitra, what does this mean for prices? Do you think prices will go up? Because they've largely remained stagnant across many key metros. Are we seeing prices go up now? And if yes, how much do you think can be passed on without any major impact on demand?
See, I think it's tough to say that there will be an overall price increase. I think wherever possible, there are some developers who are able to charge a slightly higher price for their products. I think that is natural given what we have seen in the sector. The customer today wants to be able to put their money in a safe place where they know that the product will get delivered on time with good quality. So there has to be a differentiation among those who are putting out the product. Also, all of the developers are sort of facing that increase in input costs, in the construction costs, raw materials. There's also just been, so many additional costs due to just doing things in according to COVID protocol and so on. And also we have been dealing with the impact of the lost input tax credit, which automatically adds an 18% cost on all our construction inputs and services. So as a result, in order to ensure that we are able to put out the product there, I think there will be a push to drive up prices. But in the end, it really depends on the customer whether they're going to accept that price or not. And we are seeing it in our portfolio that even in new launches as well as under construction projects, customers are willing to pay if they see that the product is, in the right location, right design that they're looking for with the right amenities, and they have confidence in the buyer that they will get their apartment at the end of the promised construction time with all the RERA regulations in place. So I think there is improvement in pricing, but if you want to look across the board, it may not seem like much of a price increase. But I think over the course of time, we will actually start to see it come up maybe, across the board. Right now, I think it will just be a few developers who will be showing that.
Okay, fair enough. So, Abhinav, now let me come to the most critical question from a realty stockholder's perspective. If we purely look at the price increase or the price appreciation, I mean, last 1 year, we've seen gains ranging from anywhere between 60-odd%, 65% for Godrej Properties to over 100% for, players like Macrotech, etc. So now you tell us this, in terms of valuing real estate stocks, what are the most important parameters one needs to keep in mind, given that this is a new multi-year cycle? Price to earnings alone obviously isn't enough. So what should we look at, and how do you find valuations within the listed space?
Sure, Surabhi. See, I mean, it is a tough question, honestly, and a lot of the people who have yet to buy into the sector are also struggling with that. So, for example, we think that institutional ownership of the sector as part of portfolios is only about 1%, or actually less than 1%. There is still clearly a lot of room to go. A lot of people struggle with valuations. The way we are looking at it, and even we are, when we make a comparison with, say, the previous cycle. So what used to happen is that while, say, NAV is a good way of looking at things, but the NAV number itself is fairly volatile, right? And somewhere in my mind, when I am say putting a buy on a stock or looking at the sector as a whole, I'm thinking about the NAV cycle as such. So where the NAV is going to go. Now there are 2 or 3 ways through which the NAV itself can be upgraded. See, for example, in normal stocks, it is the EPS upgrade cycle which can drive a lot of outperformance. I think in the property segment, it is the NAV upgrade cycle which drives the outperformance. EPS takes a lot of time to show up because of accounting. And it can go up if the overall pricing outperforms, B, you are able to sell faster than you thought, or C, you are able to make profitable acquisitions. Right now, as things stand today, good balance sheets, demand rising, inventory declining, I think upsides can come from all of these aspects. So, what we might say that stocks are trading at, say, very close to NAVs or not discounts which are lesser than history, but there is scope for these NAVs to shoot up.
Okay, so when you want to make that investment decision, Abhinav, do you stick with some of these sort of Mumbai-based players? Names like Oberoi Realty have been doing exceptionally well, lowest in terms of debt as well, so healthy balance sheets. Do you go down south because over there things are picking up because of the tech boom, more work from home, etc.? How do you plan sort of your investments if you want to put fresh money to work?
See, at the point where we are in the cycle, honestly, everything is looking good right now. So this is a nascent stage. I think the developers have done a great job of putting the balance sheets in order before the cycle is rising, and there is, of course, a good amount of market share gain which is playing out. Now, if you ask me within the 3 markets, I think maybe if I go by cyclicality and you can be a bit fleet-footed as such, then NCR is the one where nothing much has happened for so long that it can maybe surprise on the upside, and that is a market where investor demand also eventually comes in. Your point on Bangalore is also correct, and similarly, their case can be made for Mumbai. I think more on a stock-specific basis, the only thing we are looking at more today is a slightly lower exposure to commercial and incremental capital deployment going to residential. So that is sort of winning out when we're looking at stocks. But yeah, I mean, I think within the city, it's the point we are in cycle. I will just say, even a national developer can do very well.
Okay, I was watching Pavitra smile when Sonia was asking that question about, do you go down south, because the tech boom is really helping companies over there for sure. So, Pavitra, of course, I mean, you folks are coming out with big launches. What I think some 12 new projects to be launched in the next 1 or 2 days. Which brings me to the question of funding as well, because of late what we've seen is heightened private equity interest. We've seen Blackstone get very big with a lot of tie-ups in this space. REITs are, of course, a reality today. So how do you expect the sector to continue to get the funding fuel? And for Brigade specifically, are you looking at some of these deals as well in the coming months?
So on the institutional side, the deals that we've seen from Blackstone, Brookfield, and the likes have been more in the commercial sector, and obviously with the goal of setting up REITs, which they have all done and launched as well. So our commercial portfolio is about 10 million square feet, and I think for that to to sort of go the REIT way will take some time. But at the same time, what has helped the overall sector, I feel, is because of the entry of the REITs and because of the entry of so many institutional investors. It actually helps developers like us in terms of having more options to monetize, whether it is partially or in whole. In general, it gives us those options to do so. For Brigade as a whole, about 70% of our revenues come from the residential sector. And there we don't see too much private equity interest for now. But I think this could potentially change because, we are seeing that the sector has, a great potential over the coming few years. But the residential game is very different. It's about how fast can you deploy your money and how fast can you get your project done and then redeploy that capital. So it's a little different from the way the institutional investors actually approach their current commercial investments. But Brigade is focusing, and I think many of the developers will be focusing on expanding the residential portfolio. We raised a QIP of 500 crores a couple of months ago, and we are interested in putting that capital out to acquire new lands to support the residential portfolio, because we want to make sure we have the inventory over the coming few years to take advantage of what is happening in the cycle. And as you mentioned, we're launching 12 new projects. Today is the start of our annual showcase event. And I think it's the start of, a few good years, and we want to be able to seize the opportunity when it's there.
So this new land that you're acquiring, what kind of a timeline are you looking at? Will it be within this calendar year itself? And what could the launch pipeline, X of these 12 launches, what else are you looking at in terms of a launch pipeline over the next 1 year?
Well, we've put out, information that we'll potentially be launching about 1.9 to 2 million square feet. That includes these 12 launches that are happening right now. We have visibility of maybe, 4 quarters. So as the approvals come in, we'll actually be able to give more information on upcoming launches. The new lands that we're looking to acquire is, yes, definitely this calendar year. It's for outright purchases as well as joint development properties. So it's a mix of the two. We've always done that. And we feel the capital helps us, have the sort of dry powder to be ready whenever there's an opportunity that comes along. And we will be using that over the course of the coming few quarters.
Okay, we will leave it at that. Thank you, Pavitra, Abhinav, both of you for joining us and explaining the real picture in the real estate space. So definitely there's an improvement in demand, but prices will increase or not, only time will tell. People are buying more homes, bigger homes.
I'm not on that list, or not yet anyway. Let's see.